Mete is standing by. Lots of falling everywhere. What's happening on our markets here, Arabile?
Yeah, well, Nzinga, it seems that everything hasn't necessarily turned out in green fashion as we would have hoped, perhaps, on the local index, considering then that the United States did put through that surprise cut in interest rates of around 0.5% or so as well. So that is aimed at creating more stimulus to, of course, pump in more money into that economy. Whether they will perhaps put in more measures or different kinds of measures is perhaps the question. Locally, it did mean, of course, that investors perhaps shied away a little bit more from the riskier assets and decided to go into the safer haven, despite the push for more money in the economy there as well. But the questions become now around what exactly are we going to do as well then later on. We are expected to, of course, get the sentiment later this month on the 19th. The Reserve Bank Governor, Lesetja Kganyago, will give his sentiment and thoughts then on how South Africa will be dealing with that virus in terms of fiscal or monetary policy, should we say rather. The difficult element here is that you cannot pump in enough money into the economy to deal with something like this because the effects are obviously felt much deeper and are entrenched in South Africa's economy. The difficulty also comes in the local currency. What happens to that? It's a confidence measure, and with South Africa now officially in a recession, I suppose, then for that fourth quarter, the question becomes just how far will it go? Will Moody's be any happier with our scenario? That is going to be a big question as time progresses. For now, though, let's check in on the numbers and see exactly how the markets are faring, and we'll unpack the details right after this. As you can tell, pretty much a mixed picture really for South Africa's markets in particular as well there on that front. Let's check in then on how exactly things are faring. Let's chat to Makwe Masilela from Makwe Fund Managers, who joins us here at the Johannesburg Stock Exchange. Makwe, thank you so much for the time. Really appreciate it. Pleasure. Only 0.2% up, despite the cut in interest rates then from the Fed in the United States. Did you think that perhaps we could get a little bit more positive on the local bourse, or was it expected perhaps to be pretty much flat?
I think it was expected, given that yesterday, we closed up almost more than 2%. And I think since the beginning of the week, the JSE has been doing very well compared to international markets. But yes, we saw immediately after they announced the surprise cut from the US, there was a knee-jerk reaction. Markets went up, but then ultimately closed down. And the European markets, I think, are celebrating more of that interest rate cut. But bear in mind that the next coming weeks, we've got the European Central Bank also coming with a meeting, Bank of Japan, and also Bank of England. But I think it's more a question of, the Fed said that they are prepared to use only monetary policy for now. So people are maybe be worried that the bazooka that was expected was not delivered. And also more importantly, I think this coronavirus thing is coming at a time where we've got less ammunition, when it comes to monetary policy. If you have to think about it, the European Central Bank, already their interest rates are in a negative territory. The Bank of Japan, already their interest rates are in a negative territory. So now one has to start asking that how much will their interest rates cut do to the whole thing? And I think by now we know that you also need fiscal policies to have the monetary policies and as well as your social policies. So I think the markets are, maybe going to go back to what happened in 2008, where only markets go up, because the whole intention, I don't think, is to help the markets, but is to shield the economies from the impact of coronavirus. So will the interest rates being reduced be able to shield the real economies or main economies? I think we have to wait and see.
Yeah, my question just becomes, even if you pump all this money, you try to shield economies, but for how long can you do so? Is it not just fully dependent on how long coronavirus actually goes on for in terms of the rest of the globe? Or is it just purely based on, look, we'll keep pumping and doing as much as we possibly can? Yes, the Bank of Japan, ECB and the Fed came out and said, we stand ready to help as much as we can, but can they? They can't really do that much right now, can they?
They cannot, and we've seen it in 2008. Ultimately, people who will benefit, it will be the equity markets. Because if the companies there got access to cheap money, then they'll be able to access that money to be able to repair whatever debt they have to repair, or maybe exchange some of it. But I think the whole intention here, it should be to help the main economy, and to be able to do that, then you also need your fiscal policies to come into play, your social policies as well to come into play. But yes, for now, the effect will only be seen on equity markets. But you've got people who are really invested. You've got countries where most individuals are exposed to equity markets. So the minute the equity market starts going up, probably that will start boosting their confidence, and also investor sentiments will improve, and hopefully it can translate into the main economy.
A cut in interest rates locally is bound to perhaps not impact our market, though, surely. I mean, that can do very little for us here.
Yeah, but I think it's expected, and also given the numbers that we got yesterday, it puts a lot of pressure, for us to have to start doing something when it comes to that. And also, if oil prices still remain under $55 a barrel, I think the Reserve Bank, come the next meeting, they've got all the reasons to do something. And I think we have to ask ourselves that we missed the boat in 2002, 2007, 2008 to stimulate our economy, the real way. Probably this time around, we won't miss that boat, and we'll definitely do something. But we are mindful that you need more than monetary policy to help your economy. But yes, when it comes to equities, fortunately, an environment where interest rates are low, that tends to be very positive for equities, but in the medium term, not in the long term.
So with us officially being in a recession for the third and fourth quarter of last year, does Moody's say, well, we obviously knew this anyway, and we'll just move on as things stand? Or do they look at it and go, well, I think it's time to actually downgrade you?
I think Moody's are gradually risking their credibility. They're busy kicking the can further down the road. I mean, their peers have downgraded us more than 2 years back or so. And the writing is on the wall. Even the president said it, that we knew that we're not going to have a good economy. The economy is not going to be able to grow the right way. And I think it's just about time that Moody's, just please do whatever you need to do so that we can move on with our lives, because certainty is the most important thing. Give it to us, bad or good, then we can work around that. And already, anyway, we are priced the way we are priced to the likes of Brazil, as if already in junk status. It's a question of, will that $1 billion that we're thinking of be able to get out of our market, and will the impact on the rand, what it will be? Will it be a knee-jerk reaction? We'll get to 16 rand, then we go back, because remember, we still have the advantage that people will continue to chase the yield. So if our interest rates continue to be attractive, one way or the other, we'll still be able to attract, maybe not as much, because other mandates won't allow people to invest in a country which is rated junk.
That becomes a difficult portion, I suppose. Then, very quickly on the equity front locally, we've had quite a few earnings news come out, and even today then as well, some earnings news that you've perhaps looked at.
I mean, we look at MPEC. That's the company that was unbundled from Mondi, I think in 2011. They just had to make write-offs of almost just more than half their market cap, of 1.3 billion. Their market cap is sitting at 2.2 billion. And it's more a question of there was an oversupply when it comes to their products, and also load shedding had an impact on their results. So as a result, the company experienced a loss of almost 800 million or so. And that's from a positive profit that they've realized in the previous quarter. And going forward, they don't expect, especially the local situation, to improve. And also when it comes to the oversupply of their products, they expect it to stand there. But compared to NANPEC, it's not too bad, because now their PE is almost at 6.9 compared to that one of NANPEC.
But as a business, does Impact still have a future as it currently sits?
It does, because this is packaging, for food, for all these things, for businesses. So the minute the economy starts turning around, then definitely there'll be demand for products, and those products need to be paired.
Too many bets, if you ask me, on the hope that the economy turns around. Look, Mark, in a moment or two, we'll just chat about the GDP cuts that have been made then by Finance Minister Tito Mboweni, and we'll unpack that just a little bit as well now, so please do stay with me for that. But yeah, we are live, of course, here at the Johannesburg Stock Exchange. We'll take a quick break. We'll come back then and talk about those budget cuts that the Finance Minister announced in his budget, of course, in Cape Town. Where exactly does he take the money from to try and create a scenario where we're spending less and perhaps getting in a little bit more revenue? All of that right after this. Stay tuned.